Good morning, everyone. Thank you very much for joining us this morning. Welcome to today's Lawyer Checker webinar, whereby we're going to look at CQS and discuss the major changes to the accreditation. Hopefully going to provide you some guidance and some simple steps your firm can take to ensure compliance. I'm joined by my good friend Sarah from the CS Partnership. Good morning, Sarah.
Good morning, Tom. How are you doing? Good, nice to be
I'm
speaking to you today.
Likewise, thank you very much for joining us. Just a little bit of housekeeping to start us off with. Webinar this morning should last for approximately 45 minutes to an hour. If there are any questions, we'd obviously like you to submit questions, which you can do via the GoToWebinar control panel. If we've got some time at the end, we'll hopefully pick out a couple of relevant ones. If we don't have any time, we'll make sure that we come back to you personally by the end of the week to answer those questions for you. Some of the areas that we'll look at today will be SDLT, some of the robust anti-fraud measures that CQS is asking you to do. We'll look at some of the issues surrounding leasehold and also some of the elements around managing cybercrime. Many of you who listen to our webinars will be familiar with my voice by now. I'm Key Relationship Manager here at Lawyer Checker for the north of England. I very much work with law firms to help them protect themselves against fraud and cybercrime. Sarah, over to you to do your introduction.
Yeah, hello everybody. I am Sarah Keegan. I'm co-founder of the CS Partnership. I qualified as a property lawyer in 1996 for my sins, and we set up the CS Partnership in 2012, basically to bridge the gap between what happens on the ground in property departments and law firms generally, and what technology is available and how we should be moving into a brave new world effectively. So we deal with IT changes and people changes, habits. People changes. That sounds like we're changing people. You know what I mean? Let's move on from that.
Brilliant. I'm going to start us off by just sort of gauging Sarah's thoughts on a couple of things. So first of all, we can provide you with the link to the core practice management standards. If you need them for CQS, it's available on the Law Society's website. But if you do need it from us, just let me know and I can ping you over the link. So Sarah, I think a good place to start is, what do you think are the driving force behind the changes in CQS this year?
Well, the changes are not necessarily just CQS. There are a whole raft of changes for the legal profession to be looking at the moment. But let's talk about CQS in the first instance, and then I'll move behind the greater change behind them. CQS was set up in 2011, as you all know, and it was to provide a trusted community of solicitors within the residential conveyancing market that helped to deter fraud and improve best practice standards. And that sounds amazing, doesn't it? But we all know that what it was what has been to date a tick box exercise. And I apologize if anybody's going to be offended by that, but it is generally a tick box exercise so far. In the history of it since 2011, 2 firms have had their applications rejected, which is really quite ridiculous. And we all know that the standard across the industry is not the same. CQS has never really addressed that. They've never, the Law Society has not been out to inspect people or to come and tell us what we should be doing and what we shouldn't be doing. And in actual fact, I think it was November 2016, there was a solicitor who got a bit fed up with the, I can't remember his name, but he got a bit fed up with the fact that CQS was taking our, or the Law Society was taking our money as a profession and not actually enforcing its own standards, and took the Law Society to the ASA, the Advertising Standards Authority, because the Law Society was basically advertising CQS as a recognised quality standard. And the ASA found that the Law Society had exaggerated the level of knowledge, skills and experience possessed and the extent of the checks that a firm had to undergo to receive its accreditation. I'm not saying that is the driving force behind these changes. It's part of it. It's part of everything. And the thing is that dealing with anti-money laundering and anti-risk, which these new elements of CQS do pick up on, has always mattered. But as well as CQS, we are going to be held more accountable as a profession from the SRA and CQS and from the Law Society generally and from Lexel and all sorts of different bodies. And the reason for that is this. There's £100 billion a year being laundered through the UK and an estimated 39,000 serious crime groups. And it's estimated because, of course, they're not all holding their hands up and saying, I'm a serious crime group. But the Donald Toon from the NCA calls us professional enablers. Now, Donald's actually moved on to be the head of risk, I think, or head of anti-risk rather, not risk, at RBS. But the NCA is heavy on what the legal profession should be doing at the coalface of transactions. And I know that's going to upset a lot of us. It does upset a lot of us in practice, but I'll talk about that in a minute. You see, the problem is that we've got the toughest legislation in the world. And last year, as a profession, we submitted 2,660 SARs, which is minuscule amounts compared to the 100 billion being laundered. And I'm not suggesting for 1 second that we are a bad set of people. There's a very, very small number of bad lawyers. In fact, on the slide, it says 60 firms are referred to the Solicitors Disciplinary Tribunal last year for potential improper money movements, and only 40 solicitors were struck off, which is tiny, isn't it, compared to how many are on the
oh yeah, it's an incredibly small percentage if you work that out, isn't it?
Tiny percentage. But if there is £100 billion being laundered through our accounts, or laundered through the UK, sorry, then unfortunately we are unwittingly involved in some of that. And the NCA, the National Crime Agency, says as a profession that we are turning a blind eye to it. And that's concerning, isn't it? So that's the first level of it. And I will come on to in a second why that annoys us as a set of lawyers and what we're going to have to start doing about it and how much of it is fair/unfair and how all of that stuff I'll come back to in a minute. But one of the other big driving forces, and this is the big one, is that there's something called the Financial Action Task Force, FATFA, which is a global body, and it assessed us as a country, as a set of countries in the UK in 2018. It assesses us, I think, every 2 or 3 years, but last one was 2018. And now, don't get me wrong, we do really well, actually. As I said, we've got some of the best legislation in the world, and we are high up there for the way that we deal with anti-money laundering and anti-risk and anti-fraud. But not surprisingly whatsoever, FATFA found that there were vulnerabilities in the legal sector in the UK, partly because of our client accounts, of course, because we're taking in money and sending out money and dealing with money all the time. And the second reason was because of the Panama Papers scandal, where I think the problem with that was that it really became quite apparent that there were law firms who were assisting their clients to reduce or not pay tax whatsoever, and hiding behind client confidentiality in that. And it just seems that goes with the NCA's professional enablers thing, and that actually, quite honestly, we are having to look at how we're dealing with things as a profession. But even more than that, so you put those two layers in place anyway. You've got the ASA telling the Law Society that their CQS standards weren't up to advertising standards. Then you've got FATFA, and then on top of all that, there's OPBAS that was set up in January 2018. I do wish these people would bring out acronyms that I could remember, but this one stands for the Office for
better acronyms that roll off the tongue would be much appreciated.
Something that actually did what it said on the tin would be quite good fun, wouldn't it? But this one stands for the Office for Professional Body Anti-Money Laundering Supervision. Seriously, Tom, you and I could have come up with a way better title than that.
Definitely.
But anyway, so OPBAS, you do get used to saying it, but OPBAS is now holding the SRA, the Law Society, ILEX, Council Licensed Conveyancers, you name it, and the accountants and anybody else involved, the financial FCA and all sorts of people accountable for how those different bodies are dealing with the coalface of what they're doing to stop money laundering. So, in other words, for the first time in my career, and probably everybody else's career listening, well, it will be, the Law Society and the SRA are being held accountable. They are being watched just as much as we are watched by them, supervised by them. So they are heavily into...
hello, Sarah.
Hello there, have you got me? Are you there?
We lost you for
Hello?
we lost you for about 3 seconds.
That's okay. As
But
long
you're back now.
don't stop my heart like that, because I have, I'm not that great on IT, even though I'm co-founder of the CS partnership. I'm the lawyer, not the techie. So anyway, by the by, so for the first time, the SRA and the Law Society are basically going to lean on us because they're being lent on. And so far, OPBAS has said to both of those bodies, you are not ensuring that the policies that you're sitting on the shelves and saying, this is how you should be all behaving, is actually being seen right through every single transaction in your law firms. And that is then tied in with, and by the way, the National Crime Agency and FATFA are also looking at the way that everything is happening, and firms are not quite doing what we are supposed to be doing, which is not going to please any of us in how we run our businesses. But can I just say, the way to get through this stuff is to actually look at, I think, to look at it as a positive and to say, okay, let's take these new CQS requirements. Let's take this stuff that we need to be doing on anti-money laundering and anti-fraud and anti-crime. The world is massively changing, and see if we can put it into systems and procedures that then help us going forward. And that's, otherwise we'll just get in a corner being grumpy about all of it, won't we? And it's it doesn't do any good. Let's go forward with it. Does that sound a bit? Is that too much information in one go there, Tom, on what the background is and how we need to do this?
I think it's really important that we set the scene in terms of sort of why these changes are coming into place and some
And
of the
why they're not just
background.
another tick box. Yeah.
Exactly why this isn't just a tick box exercise, and probably where this is the start of the journey. So
Yeah.
ultimately, you're not going to move from what is in theory a tick box exercise to something whereby you need to be auditable and more evidenceable straight away. That takes a bit of time to build that
Yeah.
process and build that journey. So this is really the first step on the ladder, so to speak.
Absolutely.
I think now's a good time to start looking at some of the changes sort of one by one. So if we start with sort of requirement 1.2, which talks about SDLT, we know this is high on the list of insurer claims. Maybe this is a subject that probably doesn't get the attention it merits at times. I know in my experience from working in a law firm, this is always an area where I would think there quite often can be a lack of knowledge if you haven't got an expert within this field. What are firms expected to be able to demonstrate here, Sarah, around SDLT?
So the slide shows what the actual CQS requirements are how to audit the SDLT calculation and advice internally in your particular firm. I'm going to talk about these in greater detail in a minute. How and when to make checks between the consideration in your conveyancing documents and what you've actually told or what the firm has actually told the client that the SDLT values are, and then a procedure for verifying all of that. And like you say, it's one of the big this and leasehold, which we'll come on to in a minute, are one of the biggest claims against the insurers, the professional indemnity insurance across the country. And so I guess that's presumably why CQS has picked it up, of course. Just part of that risk that we were talking about earlier and the reasons why behind all of it. And the reason, you're absolutely right to say we don't need to be frightened that they're coming to see us on Tuesday next week. But I also think as part of this great big wave of everything, at some point in the next few years, our insurers are going to start saying, what have you been doing? And what have you been doing to not only, I know that we're all doing really well on the ground of doing the best job that we can, but now we're going to be inspected as you're doing the best job you can on a day-to-day basis, but where are you logging that you've done something, or where are your procedures to do that? So part of the SDLT policy that I would put in place if I was you is to actually make sure that somebody, you probably already got all of this, and I must say right at the top of this, if anybody thinks I'm teaching my grandmother to suck eggs, and I'm terribly sorry, but it's just that it's always better to start with the basics and work up. But that basically somebody's responsible for updating any and all systems within the firm when the SDLT rates change. So that's your conveyancing tools, possibly your case management system, all of your client care letters in terms of business, your brochures, your websites, your pricing structures, and any other information referred to by fee earners. I'm a big believer in training and retraining and training staff, and especially non-qualified staff, to the point where they start begging you not to train them anymore because they've got it. But at the beginning, what the requirements from the CQS is basically saying is that, to my mind, if you've got something externally to your own calculations, verifying the figures. So for my best one, I think the best one that you could possibly get, if you haven't got it written into your case management systems, is the actual HMRC website itself. It's clear, it does what it says on the tin. I think it works well. But what I'm now saying is, as well as doing that, I think you should be printing them off and either saving them to your electronic file or printing them off and putting them on your paper file. Once you've got that sorted and the quote's gone out correctly to the client, I do think that you should have a pre-printed, which you probably already have, an SDLT advice sheet, telling clients exactly what is SDLT, how it's very much their responsibility. It's an income tax, or it's a tax after all, as much on them as their income tax is, really absolving the firm from the liability of not getting it wrong if it's your fault, but the fact that you've asked them the correct questions, and from that basis forward, you're going to keep telling them and keep checking them, but that actually the SDLT return form is their responsibility, and it's their responsibility to give you the right information and to check it. The second thing that seems to be a big problem with the insurers or the claims against insurance at the moment is the second home rules and the higher rates, and the fact that firms aren't possibly telling clients how to claim those potentially claim those higher rates back within 3 years from completion in certain circumstances, and that basically what the CQS seems to say, apart from that as well, is that every single calculation needs to be verified by something else or somebody else within the department. I think that's too onerous. Actually, I've had a big chat about this last week with a firm. I think that's too onerous, and I think that qualified staff can tell that they're looking at the right figures, that they've done the right information, that they've got the right information for the client, that they've inputted that correctly, and that they know what they're talking about. Maybe if you've got non-qualified or junior members, you would possibly get them to double check with a senior member of the team every time, I don't know. But specifically then to write into your policies and your procedures as a department when you would be definitely, it's a bit more unusual, head of department or a team leader definitely needs to be looking at this particular case. So I think straightforward transactions, I don't think we all need to stop and say, I don't think we need to go from absolutely no inspections to now everybody's double checking everything we ever do, if that makes sense. But
and I think that goes back to, sorry to interrupt, Sarah, but that goes back to sort of what you said around sort of some of the basics. So you've got to identify where the higher levels of risk are, and naturally that the higher levels of risk aren't someone buying their first house for 150,000. The higher levels of risk are, like you said, on the second homes, the slightly more complex properties like farmland, etc.
Anybody buying as a company, for example, that's possible. There are quite easy points for the departments to pick out and say, okay, when this happens, I need you to check that with the team leader or me or whoever it happens to be. The other things that I would definitely say, and it might not be make me very popular, is that I think all clients should be signing the SDLT form before completion, before exchange, sorry. And that actually that they should be signing and returning their consent to the fact that they've been given the correct advice based on your SDLT advice sheet. I think that should all come back to you before exchange, where possible. And that you should update your matter checklists and your milestones of the case to make sure that these, either electronically if you've got everything online, or paper files to check that these have actually been done before exchange, because I'm a huge believer in trying not to mess up a file. And I know we all are, but anything before exchange, I think you've got the client's attention, and anything post exchange, a little bit less so, in as much as they're going to want to pack and not be so bothered with the tax.
Excellent. I think that's really, I find SDLT quite an interesting area. That sounds really sad, but I think it is an interesting area that doesn't necessarily get when we talk about risk management, probably doesn't actually get that much attention. So I think it's good that we spent a little bit of time talking about sort of SDLT there. I want to move on now to point at 1.4. So this talks about property and mortgage fraud. This isn't new in CQS. But there are a few additional points that have been included, Sarah.
There are. Some of this, I'm going to have to tell you guys, I'm not paid by Lawyer Checker. And I know that you're all on a Lawyer Checker webinar, so I can really wax lyrical about this, but I'm not paid by Lawyer Checker, and I'll tell you exactly how much of the, what I always tell law firms. So let's look at some of the requirements that aren't new but have been highlighted a bit more. CQS wants you to be doing relevant checks against the conveyancer. And that's why I mentioned about, I know you're on a Lawyer Checker webinar, it delights my heart, because that means I'm hoping that you're using Lawyer Checker on every matter, subject to maybe you having different, well, we always deal with Bob down the corner and we only do one of those searches a week or whatever it happens to be. But I'm a big believer in Lawyer Checker, because to my mind, I go up and down the country speaking to different firms, and they'll say, well, we have different alternatives over here and they're free, and we can do X, Y, and Z. They are free, but they are also the law firms that are in those free services are self-certify. So if you're a criminal, you're going to self-certify fraudulent bank details to con the rest of us out of our money or our clients' money. And that always just makes me a bit pause for breath. And the other big thing that I get on about Lawyer Checker, I'm conscious Tom's listening to this and saying this, but the other big thing is that we don't have time as a profession to sit and work out what's coming out of SRA on a daily alert or hourly alert. But Lawyer Checker's doing that for us. So to me, it's well worth the money. And I do have to say, I'm not being paid by Lawyer Checker to say that. I just, as a head of department, I would be using it as a no-brainer. The other thing, of course, is the digital badges that are now being put onto firms' websites, and the CLC have got the digital badges as well. And that's something you should be checking. You're already doing these checks, I know, but I'm just highlighting them because some of this information available to us, like the digital badges, is new. The documenting risk assessments you'll see from the slide. I've got a couple of firms at the moment who we're working with who have been assessed by Lexel recently, and who have been found wanting in the assessments. They passed with flying colours in previous years, but they've been found lacking in the assessments because although assessments are being done by the firm at firm level and department level, and although fee earners are doing assessments at the beginning of files, and it's a bit of a tick box exercise. One firm said to me, we don't really have a policy with regards to file assessments on risk. And I said, well, you do. It's medium every time, and it just gets ticked by your file openers. That's the kind of behaviour that the background from OPBAS and FATFA and whoever else, we just said that, I can't remember all the acronyms, but whoever else is now looking at us as a profession and saying that's not good enough, because actually you should know your client. You should have a feel of it, and we do. Lawyers are really good at this. Conveyancers are good at this stuff. We know when something feels funny, but we're maybe not putting that on every transaction and making a note of why we think it. So the document risk assessments, when I put that down in the slide, is because it's time for us to start doing risk assessments more than once in a file, and to actually just have a line typed in by or written on the file to say why we think it's low risk, medium risk, high risk, whether it's changed since we first got instructed, whether, whatever. To do some of that, you're going to want some red flag lists. The best one I've ever seen is from Rob Hailstone from the Bold Legal Group. And again, I'm not paid by Rob, but I think his service is superb. You want to make sure that you've got, because the CQS is now picking up on it, procedures for enhanced ID checks on clients when there's high risk of fraud, and procedures when acting for a buyer if there's a significant risk of a fraudulent seller. And again, and again, honestly, keep training them on this stuff. I know it's annoying. I know you think I've told them. I know you think they've been trained, but we're all human and we have attention spans and gnats, and you just want to make sure that you are doing everything that you can. But the biggest point on this slide, apart from the lawyer check and checking and having assessments in the first place, is to make sure that you're writing it on the files, even electronically, even handwritten, doesn't matter which way. You've never heard me quite wax on about lawyer checker before so much, have you, Tom?
No, very unusual that. Not. No, Sarah and I work really closely, so that's good. That's good to hear. I think just to expand on a little bit about the link to Lawyer Checker in that requirement, when people, I think, often think of Lawyer Checker and doing the search, they only ever think about the bank details. They don't.
Yeah.
The actual due diligence part, so the SRA API call that our system does to show things like notices and scam alerts, and the type of sort of content rich information in the further research report just perfectly tick that box. against the other conveyancer. And I think
Yeah.
if you don't do that, how else do you go about that? Do you want your fee earners to be doing individual research? Do they know what they're looking for? Whereas within a clearly condensed report, it's quite clear what to look for, and what sort of things act as red flags within that report.
Absolutely. And for a price that you pass on to your clients. I mean, it's a no-brainer. Sorry. Anyway, I'll stop now.
Yeah,
You
because
can buy
your
me
bill's
coffee.
getting very expensive, Sarah.
Coffee it is.
Right, now this is really, really topical at the moment. It's another area that sits high on the list of insurers. It's talked about majorly in the current climate. Many of you will know that Lawyer Checker are part of the same group that publicises today's conveyancer. We seem to have written an awful lot of content around this lately. Leasehold, Sarah, CQS,
Yeah.
tell us.
CQS leasehold requirement 1.5. I'm going to tell you very quickly what it says on the main CQS requirements. The advice that you've got to give the client advice about regarding the length of term remaining, the amount of ground rent and service charge, and the review provisions of the rent and how it's calculated. So as Tom says, this is a real hot potato, isn't it? I'll come on to all of that. But basically, I always go by what I was told when I was a training solicitor, sorry. And what I was told by a great lawyer at the time was, if you want to make sure that if you're buying a lease, you understand what you're in for. And I've never forgotten that, because it's such a good thing to be told. Not forget, but we have a tendency to say, here's the things you can't do with your flat, and here's the things you can do with your flat. But what you're in for is your repairing obligations, your ground rent, the escalations of ground rent, what it means financially. If you're buying a freehold house, you are pretty much paying your £150,000 and good to go. And if you let it go ramshackle, then it's your own problem, and well, maybe problems with your lenders, but you know what I mean. But with a lease, there's a lot more to it, isn't there? I know I'm speaking the blindingly obvious there, but there's a lot more to it, and I'm not so sure that we've been doing that as a profession, because we're cutting down off everybody's taking pieces of our fees away from us, and it's a pain in the neck and whatever. But you're absolutely right, because the insurers are all over this. The procedure that I would set out is that a couple of really important things. One is that you want to have a very clear policy in place for who's responsible for getting the management packs, who's responsible for the fees, how you do your undertakings with the other side, and all of that jazz with regards to fees and everything like that. That's pretty much a given. What you ask the landlord in the management packs for, the buildings insurance, the request for information charge, how they calculate it, whether there's any cap to the client, whether they'll put a cap into the client for their financial liabilities, or whether they're completely open-ended, whether there's major works in the offing in the foreseeable future, whether the service charges are paid to date. All of that I would expect, whether there's any arrears, I would expect you all to be asking, of course, anyway. When you're only in receipt of funds, then you're giving those, when you receive your funds, you give the undertakings out, all of these. I'm just looking at my policy as I'm talking to you, Tom, and it's all written in here, which is great. But the thing that is the big hot potato, of course, is the escalating ground rents. And let's be honest, as lawyers, we're not always great with finances. So escalating ground rents possibly missed everything in the past, and we've got real problems with that, haven't we? Whether there's a term less of 75 years, that's a big claim against the insurance policies. And also whether the lease is affected by the Housing Act 88, which is a big deal, because if that's the case, and the ground rent is more than £1,000 now or any time in the future in London, or more than £250 outside London, then the ramifications of the Housing Act come into play, and that then has caused some problems, or is possibly going to become a hot potato, with regards to the fact that landlords can issue legal proceedings against owners of leaseholds for their arrears without telling them that they're doing so. And if the arrears are not then paid by the ground rent, by the court date, sorry, the landlord has the ability to have that lease rescinded. I don't think that's ever going to happen. I think the judges, well, I'm hoping judges would say that was far too onerous, but it's there. And what I'm interested in this webinar, and in policies, and in protecting firms that we work with and across the board that we don't work with is not that it's going to happen, but that you've protected yourself from it happening. I'm going to come back to that later on when we're talking about risk and anti-risk, and you're going to talk to us about cyber fraud and things like that later on, Tom. But it's not about saying you're ever going to be, nothing's going to happen to you as a department or a firm, but that you've done everything you can to make sure that if something should happen to you, you can sit opposite the NCA, opposite your professional indemnity insurers and the SRA, and explain to them what you've done and how you documented it. That's the big deal here, isn't it? The other final thing I'll say about leases at the moment is that sometimes juniors and some solicitors don't really bring on board the fact that their client is also the lender. And I know we're coming on to that too, but if you've got escalating ground rents, or you've got Housing Act 88 issues, or you've got issues with arrears, or something's not been resolved before exchange, and you need to put in deeds of variations to the lease or anything like that, you need to be telling the lender, because they're a joint client, and sometimes that passes us by a little bit. I know we get it, but it's whether the teams are getting it. So there you go. I'm very conscious not to be teaching my grandmothers to suck eggs. So it's all my grandmothers are brighter.
In particular, some of the things we talked about so far, so things like SDLT and leasehold, and when we touch upon cybercrime shortly, one of the questions that law firms often ask me when I sit in front of them is quite often we're sometimes unsure where we draw the line.
Yeah.
And I don't think there's any magic answer to that question, but I think there are certain areas that you draw the line a lot, how can I describe it? A lot further away, for example. So that with the likes of SDLT and leasehold and cybercrime, these are areas that you have to be more robust in, because we've already highlighted they sit high on the list of insurer claims. They clearly are the key standout points from things like CQS and Lexel. And I think where you draw the line question, you've kind of given some really useful guidance there, I think, Sarah, in terms of a lot of the documenting and the evidence side, because you want to be able to demonstrate as a firm you've done as much as you can do to protect yourself and to show what you've advised. And when we talk about sort of leasehold and SDLT to your clients as well. So I think when you think about that question in your firms, you have to make an informed decision based on what it is you're dealing with and the risks associated, and that should help you answer those questions a
how
little
far
bit
you
better.
want to go as a team, how far you want to sit down as a department and say we're going to be saying this and we're going to be saying that, and we're happy with X and we're happy with Y, and Z we're not happy with at all, and we're not doing that, or whatever it happens to be. But the point is to document what. No, I don't mean saying we sat on this date and thought this. Not that far documentation if that's too onerous for you, but to actually be logging that you've thought about it and this is what you're putting in place as a consequence of what you've decided.
There's a couple of other new points that have been added that are probably not as major as the ones we've talked about so far. Could we just run through a couple of these, Sarah? So we've got reporting matters to lenders and the HMLR property alert as well.
Yeah, sure. And again, this is CQS updating itself based on claims. I think when I read it, and then you compare it to what the PII teams are putting, firms are putting out as what is currently in the claims list, then it is definitely mirroring what's gone in here.
Definitely. We did a webinar that I think many people who are attending today probably listened to a couple months ago with Howden, and a lot of what we talked about were included in Jenny's slides.
Absolutely. So the reporting matters to lenders is that always to every lender is different, of course, and to use their specified reporting form to drive home and to, again, back of that training. I'm not talking about every week, but every so often to train your staff that the lender is your joint client, and to pick out in the departments the things that you would want to be mentioning to the lender, or that it is an issue if you haven't already done so. So the CQS say that we have to identify the nature of the matter being reported, we have to provide appropriate legal advice, and to indicate to the lender, because they don't want the hassle of deciding what the answer is. They want us to decide what the answer is. So to provide to them what action can be taken to minimise the risk for the lender and what you're going to do about it. I've got some examples for you. A lease term possibly shorter than the term accepted by the lender, subsequent charges or restrictions on the property, third-party gifts which aren't detailed in the mortgage offer, changes in the price or the financial terms or different structures, anything to do with ownership changing midway, occupiers that the lender's not aware of that aren't detailed in the mortgage offer, adverse title issues, when the lender's issuing the wrong type of mortgage offer. This is a big one, isn't it? So you've got a standard mortgage, but the client intends to rent the property out and has told you that on the QT. There's no such thing as the QT because the lender client is your own. I would say to you, just picking that up, I was talking to somebody last week, to cover yourselves, put that in your engagement letter if not already. You know, that some kind of paragraph about if there's any kind of, obviously you're our client, Mr. Borrower, but if there's a problem between you and the lender at some point in the future, we're going to have to report something to the lender, politely, respectfully, of course. And yeah, that's the kind of thing that you want to be talking about, and making sure your teams know what to do, and to have an open door policy if they think anything else that they should be reporting. You know, no access to the property, no sewers, whatever, as long as until and your own departmental issue about where, when and where you're going to pick that up, or whether you're going to deal with it beforehand, before your cot goes in. And very quickly there, you can see the slide, there's a requirement 5.6F to use the HMLR property alert service. And again, you can draw the client's attention to that within your post-completion letter to the client, confirming that completion's happened, and you know, all that sort of thing. But it's just that CQS is picking up as much as it can these days, or in this new changes, about how to protect you as a firm.
I think just touching on the HMLR property alert service, I was at an event a couple of weeks ago where people in the room were talking about making this mandatory, so clients just get auto opted into this, which I think is a really good way forward. There's no reason why clients shouldn't be why you wouldn't opt your clients into this. It's a bit of a no-brainer. It's free.
It's free, and you've done your job, and you know,
yeah, or consider potentially auto-opting them in at the start. So within your client letters, within your initial instructions, make it clear that you'll auto-opt them into this. That just seems like a bit of a no-brainer and a really simple thing to do. And you're effectively giving education away at the start rather than at the end, which I think is the sort of relationships that you want to build with your clients, and it kind of mirrors that quite nicely.
Brilliant. Now, we've been talking a little bit about Cyber Essentials accreditation, and I'm really glad that it is part of requirement 6.2, and I'm so pleased that you're on the call because, and I'm just going to say, tell us what you do. Tell us about the requirements and what you would do about it.
So a little bit of background on Cyber Essentials. So Cyber Essentials is born out of the National Cyber Security Centre, which were born itself out of GCHQ about 4 or 5 years ago now. National Cyber Security Centre, you may well be familiar with. So they featured quite prominently in last year's SRA risk report, where the SRA used a number of the materials and literature that the National Cyber Security Centre produced for the legal sector. The idea behind Cyber Essentials is it effectively should give you a really strong and firm understanding of the basics around cybersecurity. So some of the things that Sarah and I have talked about so far are not revolutionary things, that it's ultimately evolution. And one of the things that I talk to firms about when they're managing cyber crime as a whole is looking at marginal gains. So the little 1 or 2% things that when added up can make a fundamental difference in the way that you manage sort of risk and cyber crime. And that's really one of the ways that I see Cyber Essentials. It obviously features here within CQS, so you can see it says practices must have an information management and security policy which should be accredited against Cyber Essentials. The same wording other than a couple of words, appears in Lexcel as well.
Yeah.
So it sits in there this year. And what Cyber Essentials is effectively a self-assessment. So it's completed via an online portal. It looks at a number of sort of fairly basic areas around cybersecurity, which if you get them right, and if you get the appropriate measures in place, should protect you against 60% of cyber attacks. So it really does give you a really good foundation on which to build on. I talk very much about managing cybercrime in two distinct ways. So you've got your technical competencies. The technical competencies are really things that are featured in Cyber Essentials. So things like making sure your patching is up to date, making sure your password culture is strong, making sure what you outsource to IT providers is working. That's a really key point and something our clients have found quite useful in Cyber Essentials. So some of the questions relate to what the people they're outsourcing are doing, and it's been a really good way for them to test that is A, up to date, and B, it's working, and C, is relevant. There's often a lot of these contracts that are there with outsourced IT providers might not have been visited for a number of years. So it's a
Hmm.
really good way to test that that's working. Lawyer Checker is a Cyber Essentials accreditation centre, so we can assess firms and provide them with their certification if needed. We can also provide consultancy to help them pass
Yeah.
if that's relevant. We've been doing that now for about 6 months, and if you follow our sort of social media streams, will have seen a number of sort of case studies that we've rolled out recently for firms that we've managed to help with this. There's a couple of other key points in 6.2 that I just want to touch upon. So training for personnel on information security. I would replace information security there with training for personnel on cyber. It is something we can help you with at Lawyer Checker. We're actually in the process of building a training platform for firms, so for them to be able to roll that out to staff and use that as a way to refresh knowledge, which will hopefully be available in the next couple of months. Procedure for the secure transmission of the practice's bank information to clients. Now, I want to touch on that. So, I think when it says secure transmission, I think you need to consider as a firm whether you want to send, or is there a case where you would ever want to send your bank details to a client via email? In my opinion, the answer to that question should be no. So, uh,
I love your
uh,
understatement there. Mine's a
so
firm no.
yeah, mine would generally be a firm no, and I'll tell you why in a second. There's some reasoning behind that. I think your best practice there should very much evolve around your bank details being in your initial client letters, so the
Hmm.
initial way that you communicate with your clients. And if for any reason you need to relay that or update that information in the future, I think you have to choose a layer of protection that you're comfortable with. So whether that be face to face or whether that be a telephone call in the knowledge you're definitely speaking to the person that you
Yeah.
need to be speaking to. Now, the reason I say that is a couple of clients that I've worked with in the past few months have given me examples of where they have sent an email to their client with the bank details for them to pay their deposit funds into. On one occasion, a client used a PDF. For some reason, there's this slightly, I don't understand it, but there's a slightly strange perception that PDFs are secure, or they're not. They're not. They're no more secure than a standard email. The client's email, sorry, the law firm's email was then intercepted at the client's end by the criminal. What the criminal did is obviously change the details in the PDF to their bank details. They then managed to impersonate the law firm's email and send that email back to the client. Obviously, the client thought that was a genuine email. Um, Fortunately, on both occasions, the firm had another layer of protection that saved this. So it was actually the telephone layer that saved them on one occasion. on the other occasion, the client actually called in, and while they were on the phone, they just confirmed a few quick details, and it was at that point that the bank account details didn't match. So my best advice there is do not send your bank details to your purchasers to send their deposit funds into in email. Send them into your client letters, and if you need to relay that information, make the right decision based on your knowledge and your understanding in terms of what the most appropriate layer is.
Can I just connect
Procedure, of
a second?
course you can.
Because I really like advising. I really like client firms sending out their engagement letter by email so that they can get the e-signatures back. We've got some fabulous data on the fact that 60% of your engagement letters will come back within hours if you do that, and it's just lovely. And I'll send that out to anybody who's interested. But what we do, because of what you've just said, is split out the engagement letter slightly into two ways. So the T's and C's and your standard information. Send that out by email. Get a digital signature and get it sent back in. That's brilliant. And then send out the things that you want the client to complete, like I've just received the SDLT advice and I'm fine with it and all that jazz, and the bank details by post. So you can do it as a two-stage process, but it means that you're secure, you've complied with all of your requirements, you get moving on it, and everybody's signed up to the contract between you, basically. But there you go. Sorry, that's my 2 pence.
There are, of course, email encryption products
Yes.
out there in the market that firms are using. If you're confident enough that you're using an email encryption product,
Yeah.
and that the document you're sending is landing in the right direction, then of course that would seem a fairly sensible decision for those details to sit within there. I know a few people who use email encryption, and for document sending it can be quite useful. So that's an example of where you could potentially do it. Lastly, procedure for verifying the bank details of other conveyancers. We've kind of already touched upon that from a lawyer checker angle. I think the third parties bit is the really interesting one of that, in that most firms now for a number of years have had processes or procedures where they're verifying the bank details of other law firms. However, I think where there is probably a slight gap is where firms send monies to individuals. Now, whether that be in conveyancing, wills and probate, or PI, I think there's a definite gap between the strength of the process when checking another law firm's bank details to the strength of a process when sending money to an individual. And if you look at some of the cases that have made the national press in the last 6 months or so, cyber criminals seem to be targeting law firms at this point. So when they're sending monies to individuals, so whether that be through the administration of an estate, or whether that be through the proceeds of a sale, or even I've heard some examples of where the monies on account that have been sat there a while have also been targeted. Lawyer Checker have a really simple product that helps with this. It's called Consumer Bank Account Checker. It ensures that when you send money to an individual, the bank details that you're sending to match all the details of the actual client. So it will grade things like the name, the date of birth, the address against what is held on the client's bank account to give you some security in that. And linking back to what we talked about at the start of the webinar, where you need to document and evidence processes, that's a great way to be able to document and evidence. Just because someone has been in front of you and you've seen a copy of what purports to be a bank statement, doesn't necessarily mean that those bank details belong to them. It's not difficult to forge a bank statement in this day and age either, and it's also not the easiest thing to be able to document and evidence either. So Consumer Bank Account Checker is really good for that type of thing, and you can show your insurers it as well, and that's an area I know that they're focusing quite sort of heavy on at the moment. So the next steps around CQS, Sarah, and what do you think these all look like?
I'm told that they plan to do the Law Society plans to do 50 assessments this year. I don't know if that's too much for them or not, but that my intel on the ground is that they're going to be asking the current Lexel assessors to be picking it up, and you can see why, because it sort of dovetails quite nicely into what they're already doing, doesn't it? I think 50 is a good solid number. I think they'll be trying to find as much splash out there as they can to prove that they're doing something proper about it. So yeah, I think that the future to me is 50 initial assessments this year, and to make sure that if you are one of them, that you are, like I know we keep saying it, but driving the changes through to the coalface and documenting what is in the policy, not just writing the policies that go with it, but actually how you then taking out the details of those policies and putting them into practice on the ground.
And CS Partnership can help law firms with a lot of these policies, can't you, Sarah? Do you want to tell us a little bit more about how
For
you can do
sure,
that?
yeah. I have written for our clients and us we're selling. Let me just get my list. We are doing all of that. The extra policies for you: an SDLT policy, a mortgage fraud prevention policy, which is requirement 1.4, which goes with an internal reporting form and a note on the Joint Law Society and HMLR's practice note in this area, both of which are mentioned in the policy, so we've just added that in. A leasehold policy, a reporting matters to lender policy, and a clause to be added to your existing file closure policy for dealing with the HMLR property alert service. And I've added to it since I first drafted it, that SDLT advice sheet for your clients, and a form for them to complete and return to you, as I was talking about earlier. All of them are in Word format, so they can be adapted as you see fit to the way that you're running your departments. And the whole lot is priced at £250 plus VAT, a combined £250. Sometimes people come back to me and say, £250 each? It's £250 for all of those. The process by that is that Tom's got some details at the end of the slides about how you can get in touch with us. If you are interested in buying those policies, just send us an email saying I'm interested, or ask any questions beforehand if you want. But any kind of email in, and then we raise the invoice, and on receipt of the funds, we send the policies out by email.
Cool, excellent. Thank you, Sarah. And I definitely encourage you to delve into Sarah's expertise. Having listened to this, hopefully you will. I've worked with Sarah now for nearly 18 months, and I think everything sort of, when I hear you talk, Sarah, I think should be really relevant to firms. I think you're really engaged in terms of what's important, and I think it's a really good opportunity for firms to sort of use your expertise.
Thank you.
So how can Lawyer Checker help? We've already talked about some of the things we can do. So yeah, how can Lawyer Checker help? So you can obviously use our Lawyer Checker search. We're Cyber Essentials assessment centre. We can help with the staff training angles. One of the things that we can do that might help develop this conversation and potentially build a relationship with you if we don't have one with you already, is via one of our free cyber risk reports. This will just give us a really good base and help you understand maybe some of the things we can help you with that link nicely to CQS. These are completely free. We can produce these pretty quickly for you, and then we can have a conversation with you off the back of that. If you would like one of the free cyber risk reports, my contact details will be on the next slide.
Tom sent me one of those free reports last Friday, and I can't recommend it highly enough. It's well worth it. It's free. Just ask him for it because it's good.
So we'll leave our contact details on the slides. We've taken up quite a lot of time today. So if you have any questions, feel free to email both of us or either of us, depending on what the question's about. And we'd be happy to help answer any questions that you've got. Thank you very much for your time and listening this morning. Hopefully this has been useful in delving a bit deeper into something that gets mentioned a lot, maybe with the wrong perception. I think we've probably showed you that is going to probably start to change as we move forward. So yeah, thank you very much, everyone, and thank you very much, Sarah, for your contribution as
You're
well.
welcome. It's a pleasure to be involved. Thank you very much, everybody, for bearing with us and listening.
Brilliant. Thank you, everyone. Have a good day. Bye bye.
Okay, bye bye.